Hello traders, and welcome to another video review. Today is Monday, 25th of July 2022, the beginning of the new trading week. Please remember, this is the last week of the month of July, and the Friday is the last day of trading for the month of July. So we have the weekly close, very important, and monthly close, very important. So let's start with our Forex calendar review. As you can see, today on Monday, there isn't much of the interesting data scheduled for release. We got some data from the Germany, which might impact the euro dollar, of course, German business expectations, current assessment, and IFO business climate index, the most important of those three indices. All of them are scheduled for release at 10 a.m. Moreover, at noon, we got the CBI industrial trades orders from the UK, and that's about it. This is everything for today from the perspective of the importance. So we have the most important event and the medium important events for the Monday. So in that situation, please take a look at the German IFO business climate index. Market participants expect a drop in business climate from 92.3% points to 90.2 points. So this is a 2-point drop. Kind of a interesting data. So despite the fact of the recent nice data from the German economy, business climate is expecting to drop 2 points. So if we are talking about the German, if we are talking about the business climate, let's focus on the euro. However, first we are going to take a look at the US dollar. Daily time frame chart of the US dollar to the Japanese yen. Why I'm bringing it at the beginning of our technical part is because I want to show you the negative divergence, had it been played out by the market participants. Because what do we have here is, of course, the uptrend, and during the uptrend we have the breakout towards the new high made on the very big momentum towards the this is 85 points. So the market conditions are extremely overbought. However, the uptrend is being continued after a shallow pullback. We got another high on the lower momentum. However, it's still very strong. Another high on the even lesser momentum, right? So this is the level of 76, the lowest momentum from that three. However, the market is still going up. Nevertheless, longer pause of the of course of the uptrend, right? We got this correction here, and we can see that on the momentum. False breakout below the level of 42 points, the lowest level, and then up we go in the momentum, and very strong movement in the price, way above the last high. And this is the situation that continues towards the recent high at 139.40. so we got this kind of a up move on the US dollar to the Japanese yen, and the systematic consecutive decrease of the momentum. So the last high was made on a very low momentum. Apparently this high on 139.40 was made on the lowest momentum from all of these high mates here, right? So we got the drop towards 30-day moving average. We are sitting on this moving average right now, and we are sitting on the level of 50 on the RSI. So this is to be or not to be for the bulls. If we break lower, we will have potentially the biggest correction, potentially, of course, during this uptrend, because we might get as low as 131.47, which is the low of the 16th of the June 2022. So that's why it's my blue arrow is here. So if we break here towards this level, the momentum will drop towards the level of 30, right? And the level of 30 has not been seen since last year, basically, and we have not seen this level since 5th of the January 2021. Okay, and this is a daily time frame chart, so that's a kind of an important touch if we get there. Okay, please remember, this is only a potential scenario. However, it looks like we are going up the uptrend is being continued. It's not a reversal. There is no reversal pattern on the US dollar to Japanese yen yet. However, we should be doing some kind of a bigger correction, bigger than 4%, 3.89 to the downside soon. Let me just at the end kind of picture you the potential correction. Minus 5.75% is in the is on the table. That was the US dollar to the Japanese yen. Let's take a look at our most traded pair on the Forex market, euro dollar. Euro dollar scenario for the nearest price action is ABC to the upside. This is the corrective pattern. Please remember, this is the corrective pattern. Recently we bounced from 9,953 pips towards 50% of the Fibonacci retracement, 1.0282. This is the top for the wave A. We are waiting for the wave B to come a little bit lower. There is a possibility that wave B might complete somewhere around 1.0126. That's nothing wrong with that. Then of course wave C to the upside is being expected towards 1.0361, so it's almost 100 pips above the top of the wave A, the 80 pips exactly. So what's the biggest outlook? From the bigger time frame is down. Basically, the euro is bouncing in a corrective way from the parity level of 1, and of course from the sub parity levels. The low was 9,953. However, this is not a trend reversal. This is not a pattern that could potentially move the price above 1.0788, which is the game changer. Any close above this this level means that the downtrend on the euro is done and we are going higher. So that's the euro dollar. Let's take a look what is going on S&P 500. Daily time frame chart of the S&P 500. As you can see here, the weekly weekly close, last week close was still away from the key technical resistance zone, supply zone as we call it, 4,114, 4,180. This is the zone, and as long as we trade below this zone, the outlook remains bearish. So what do we have here? We have ABC to the upside again from the lows of 3,633 to the wave A, ABC to the downside. We got the wave B. Now we are doing the wave C. Where is the target? Potential target, for, of course, based on the Fibonacci. If we measure the length of the wave A from the bottom of the potential wave B, 100% is around 4,036. So this is the potential target for the wave C, and we should see a reaction from that level. Let me just see where is the 127%, because it's not here on the screen, because it's not right now possible to make it. There you go. This is our level 100, 127, 168. Those are extensions of the wave C. So 127 is 4,122, just below the lower line of the supply zone. Okay, so very nice zone, very important zone. We have the confluence of the technical zone and the Fibonacci extension level. Please keep an eye on the zone. Please keep an eye on the Fibonacci extension. We might do only ABC to the upside and then drop. Momentum is of course positive because we don't the low for the wave B, and as soon as we get towards the level of 70 on the RSI, which is the extremely overbought market, the chances for the move to the downside are very high. Okay, that was S&P 500. Let's take a look at our last market, which is of course Bitcoin. What is going on the Bitcoin? The Bitcoin is going down from the upper channel line. So the market is clearly very technical, and after the pin bar was done, which I was talking about, of course, towards the upper trend line, it was a false breakout because this line was a little bit lower around here. So it was a false breakout, and since then please take a look. We got clearly market closed between long-term trend line. Let me just make it thick, make it thick so you can see that this is the important line. This is false breakout above the long-term trend line. This is the orange one. We are bouncing up and down from the trend line towards the short-term trend line, from the orange to the blue, from the orange to the blue, bam, 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 and then we hit the level of 22,961, which is technical resistance, and finally we got very big, relatively very big since the high was made. A down candle, a red candle, right? We are just sitting on the technical support around 21,864. If we close below this level, and if we close back below the long-term trend line, the chances to the breakout out of the channel are very high. However, please notice the fact that this market is very technical, and all of this movement here might be treated as the movement which is called corrective in nature. So that moves to the upside are not the moves that could start a new uptrend, new long-term, multi-year, multi-month uptrend on the Bitcoin. This is not the correct cycle yet. So we need to wait a little bit longer for the market to complete the correction. We'll make possibly another down wave, and then maybe the market will start dynamic, aggressive uptrend higher. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.